The content here is for informational purpose only and should not be taken as legal, business, or tax advice or be used to evaluate any investment of security and is not directed at any investor or potential investor in any AlphaSwap podcasts.
Hello and welcome everyone. I'm King Uy and this is the AlphaSwap podcast. Every week we'll be discussing a top investment idea from the platform and have an in-depth conversation with the user who posted the idea. You can learn more and join our community at alphaswap.io. This week, we're talking to Milan Zuidhof. Hi, Milan. Thanks for being with us today. Can you start by giving a quick introduction of yourself?
Of course. Thank you very much for having me, King. First of all, a little bit about myself. I'm currently studying a master in finance at IE Business School. Before this, I did a bachelor in international business administration in Rotterdam. Then in my gap year, I did some internships in, among others, investment banking, private equity. I've been investing in the stock market previously, but I kind of went out of the game. Then because King approached me about AlphaSwap and the platform, I learned a lot about the platform and I got excited to start investing again. So I started investing a couple months ago and I came up with this idea that King would love to talk about today.
Great. And can you, before kicking off the idea itself, can you share us a bit about your investment style and philosophy?
Yeah, so me as an investor, I don't really make a differentiation between value and growth companies. I like to have a healthy mix in my portfolio. That being said, I do a top-down analysis for my investment. So I typically start by finding a trend that I'm very interested in. And then I try to find attractive stocks, either with a low valuation or with an appealing growth story to supply to this trend and to be one of the winners of the trend.
Okay, makes sense. So which stock are we going to talk about today and what's the trade? Can you give us a bit of context, upside, downside, etc.?
Yeah, for sure. The trade that I would like to propose, or that I've proposed already actually, is a long position in BFIT. Just a headline upside would be for the base case about 30%. And I talked to you previously about the trends that I'm interested in. BFIT, I think, is a very good player in the trend of moving towards a more healthy society. It's a fitness chain, as some of you might know, and they're consolidating very rapidly. And also they're kind of professionalizing the fitness chain landscape. There are a lot of mom and pop shops around, and BFIT is trying to make a strong player that's really a market leader in the European market, at least. They also operate in the value for money segment, which in my opinion is very attractive when it comes to trying to make this healthy proposition for society so that the whole of society can be again engaged in going to the gym and taking good care of your body, etc. And then obviously the main upside that I see here is the reopening play. Right now, there are a lot of gyms that are being closed, and this is priced into the stock. So reopening of economies will boost BFIT stock price.
Okay, gotcha. And just a bit more detail on the business itself. How many are there? How do they make their money? What's the model? That'd be great.
Yeah, so BFIT right now is, at least according to their 2020 annual report, just shy of 1,000 clubs around Europe. They're mainly active in the Benelux, or that is where their history was. They started, heard in the Benelux a bit, something like 15 years ago. They got investments by 3i, which was very actively involved in consolidating this fitness landscape. And then they IPO'd a couple years ago, and they expanded to France, where they are now almost as big as they are in the Benelux and growing extremely rapidly. Of course, France is a much larger market than the Benelux, so there's a lot of potential for BFIT to consolidate the market there. They're already in the top 3 players, let's say, based on the number of clubs that they operate. And it's expected that they will be the number 1 even this year, maybe next year, or at least the year after. Then they're also expanding to other countries one by one. They're not engaging in very, very quick move arounds throughout Europe. But now, for example, they started in Spain, which obviously is also a very large market. They got a toehold a couple years back, and now they already have 50 clubs in Spain. which I expect obviously to keep increasing. Then a bit more background about the business model of BasicFit. So what they typically do is they find a nice location, especially when they move to a new country. They pick some A-level locations where they have a lot of visibility, so they can get the brand out there. And then as they expand, they go for more B-level, which is obviously cheaper, but because their brand name is already out there, they enjoy this membership growth. They have very low cost memberships. They cost about 20 euros per month, and they do recently start with upselling products. So they also have a more premium offering with discounts on personal trainers, sports drinks, which cost about €1 per month if you are a member, etc. And then a bit about their financials. What mainly strikes me about this company is that they have a very cash flow generative business model. If you would take out the expansion capex that they make, obviously the last years they have been growing extremely rapidly, which obviously hurts their cash flow. But as they keep growing, the incremental investment that they make is a much lower percentage of the company. So then the mature clubs that they already have, they should generate as much cash flow so that they can start becoming cash flow positive.
Okay, gotcha. Great. That's a very clear explanation. And just a bit more on the metrics, right? So what are the key metrics that you look at? In terms of growth, return on capital, cash flow yield, and what are they as a guideline?
Yeah, so starting a bit from the top line, I think it's very important to follow the number of new club openings, which in turn drives the new memberships. If BasicFit moves to a new region, they get increased memberships there, and they're expected to have about 3,000 to 3,500 members per club. And then you have the EBITDA per club, which is, even though clubs are different in every region, it's kind of a very good average that BasicFit always aims to achieve with a very stable EBITDA per club. And then I alluded already to the free cash flow that BasicFit generates. Over the past years, they have been expanding very rapidly, so they have negative free cash flow. But I expect, this is also what I modeled in my DCF, that in 3 years' time, so after 2024, they will become free cash flow positive, because they have so many clubs or so many mature clubs up and running that they increase their cash flow so much that the expansion capex does not hurt the free cash flow anymore. This will then, of course, in the beginning lead to a very small free cash flow yield of about 1%. But I expect this to move to 15-20% in 10 years' time. So that is my main financial thesis of BasicFit, that their free cash flow yield can be incredibly attractive.
Makes sense. And in terms of, you're talking about EBITDA and earlier, so what is, as a guideline, what is sort of the top line per club, and then the EBITDA and EBITDA margin? Just very curious.
Yeah, let me quickly pull up the model that I made. So per mature club, BasicFit has historically achieved an average EBITDA per mature club of about 270K per year. And the margin, I do not have it readily here, as I did not model the revenue. I modeled from EBITDA downwards.
Sure. Gotcha.
So this is a very attractive number, because their investment, their capex to open a new club is about 1.25 million. So it would take about 5 years for a club to earn back the money, and then there's very little investment left. In a club, you just have like 2 or 3 personnel members, and that's it.
Great, totally get the thesis there. So why is the market mispricing this stock, and what are the catalysts that need to happen for this trade to work out? Yeah,
so definitely this is the reason why the market misprices my stock is also my main investment thesis. It's the gym closures due to COVID, especially the regions where BasicFit is mainly active, like the Benelux and France. They've been hit very hard by COVID-induced lockdowns. And Basic Fit has had to raise equity twice already. It's not a significant sum in total, between 5 and 10% of their market cap. And I think the market might be pricing in even more equity raisings as lockdowns are being extended throughout Europe. And then just apart from the equity raisings, we saw recently when there was news that the vaccine was performing well, that it was rolled out well in countries, and the stock price from Basic Fit jumped to up to a 20% of the price when I proposed this investment. And then when news came out that lockdowns were going to last a little bit longer in the countries where Basic Fit is active, then the stock price dropped again to the level of where I proposed the investment. So that really shows that the market is very sensitive to news about lockdowns, and at some point it just has to stop, these lockdowns. Economies are going to reopen with the vaccine coming out. So that's one of my main catalysts. And then beyond that, when economies are open, then I believe that the opening of more clubs for Basic Fit is going to be their main driver of returns, as well as just in general more optimism towards this asset.
Okay, gotcha. And can you tell us a bit more about valuation? What's the right metric, and how did you get to your target price?
Yeah, so I also read some equity research reports, and enterprise value over EBITDA is the most widely used by all the brokers. So that's also where I'm basing my analysis on. And currently the enterprise value over EBITDA is about 25 times, but you have to realize that EBITDA decreased by 50% in 2020, which is quite a significant part. And if you would take the 2019 EBITDA, which was 150 million, which is a more reliable number, if you imagine that clubs are going to reopen maybe in 2021, they will not yet achieve this EBITDA, but maybe in the next year they could even overshoot it. Then they have an implied multiple of about 12.5 times, based on an historic average of 15 times. So there's already some upside in the multiple to be achieved here. And in the latest annual report by management, the annual report of 2020, management expected to be able to increase EBITDA by 30% compared to 2019 levels, even without opening new clubs. And that's basically due to upselling their products, as I previously alluded to, with discounts on personal trainers, etc., and the maturing of the clubs that were opened in 2019. I do expect, though, that this is very optimistic and this will not be achieved in the next 2 years, but maybe in 3 years, because Basic Fit lost a couple of members. They're still above their membership rates of 2018, but they lost about 10% of their members compared to 2019. So it might take a little while before they can increase their EBITDA by 30% compared to 2019. But obviously, they do open new clubs. In 2020, they invested in opening new clubs, and they're now also constructing new clubs, about 40. So they're doing extremely well there. And then you have this big comparable, Planet Fitness, in the US. Some of you may know it, and they have the same value proposition as Basic Fit. They are a low-cost gym operator in the US, and they also did a massive consolidation play in the country. And in 2016, 2017, Planet Fitness was trading at similar EV over EBITDA multiples as Basic Fit was doing in 2019. And Planet Fitness is about 15 times EV over EBITDA. And 2 years later, in 2019, Planet Fitness traded at about 25 times EBITDA. Of course, this is the US. Valuations there might be more elevated than in Europe, which is a common thing. But this does imply for me that there is still some upside for Basic Fit to be achieved, of course, when economies are reopening. And you see that Planet Fitness its stock price has a similar movement as Basic Fit is now having with COVID. So it's not like Basic Fit is severely underperforming its main peer. They're doing the same.
Great. Yeah, gotcha. It's very clear. I guess finally on the investment side, what are the risks and any mitigants on those?
Yeah, the key risk is very clear. It's extended lockdowns. If lockdowns will last throughout the whole of 2021, and if the vaccine is less efficient than we expect, then extended lockdowns can severely hurt Basic Fit. And if I would know that lockdowns would continue, then I would not invest in Basic Fit right now. I would wait a little and put my money elsewhere. Then I don't expect this to happen, but you always have to take it into account that there could be a dry run on newly opened clubs. Of course, Basic Fit also always does a lot of research before they open new clubs in new neighborhoods, new areas, new cities. But it could be that they cannot find new locations because all the people living in the location are already served by another gym operator, or that they open a club and that people don't like the proposition of Basic Fit. I don't expect it because Basic Fit has historically proven to be very successful in rolling out new fitness change throughout Europe, in France and in Spain. They've been very successful. Then many people fear also that because of COVID, there will be a move towards more home fitness. But I don't believe that this is necessarily a big threat. Of course, you can work out at home, buy a set of dumbbells and some resistance bands, but it's not the same as being actually in the gym with the proper machines, etc. Then you also have competitors like Peloton, but they are not as low cost as Basic Fit. So that is operating in a completely different segment.
Understood. That's great. And then finally, we'd love to get a couple of general investment insights from you. Firstly, which resources do you use for your research? Secondly, what's your favorite investment book? And thirdly, what's the most important investment lesson that you've learned?
So the second two are, the last two are some hard questions to think about. About the resources that I use, I like to use AlphaSwap, obviously, to generate new investment ideas.
Great.
Obviously, I don't trust just on the judgment of others. I always do my own research, but it's a great platform to gather new ideas of stocks that you weren't even familiar with, or to get insights into a new sector. So that's very helpful. But then for doing my own research, I usually use FactSet, which is provided by my university. There I can do tons of research. I read equity research reports of analysts, not to follow their models, but to see what they spoke about with the management teams, for example, what are their views on the company and the sector. But yeah, also to find which stocks are in a certain trend, but are valued in a different way than one of the other players. Like, I like to invest in trends where there's, for example, one big player that is consolidating, but then there's another player which is kind of similar but a little smaller and massively undervalued because it's just less well known. Then about the favorite investment book, I don't read many investment books. I did like A Random Walk Down Wall Street, because it really, as the title says, it really shows you that the stock market is a random walk. You shouldn't be scared off if the price suddenly drops, because if your investment thesis is right, your stock will always move with a certain drift towards a certain point. That's also one of my most important investment lessons, that don't get scared when your stock drops just a little. It might bounce back. And I would not divest a stock until my thesis has been disproven. And this might be a good one for the beginners. Sometimes you find that your stock is not very volatile, it's trading very flat. So then you think, okay, I'm going to sell it because nothing is happening. But from my experience, the stocks that I have sold afterwards perform better than the newly stocks that I bought. So be careful when you sell a stock, because you might lose out on some opportunity cost.
Totally. That's great. No, thanks very much, Milan. This is really a really interesting, great trade idea, very well researched, and thanks very much. Thank you for listening to the AlphaSwap podcast. If you'd like to read more about this trade idea, please log on to alphaswap.io. On the platform, you'll also find lots of other interesting trade ideas. Look forward to the next episode.